Hello, and welcome back to this episode of your South King County Real Estate Update. This little guest star decided to join me right before I went live. So Ninja is making a quick guest appearance. I'm sure she'll be gone soon. But I just wanted to say welcome. I'm so excited about today's show. There's a lot going on. It's breaking news. I will get to that. I'm going to hop into these slides and not delay because there is a lot to cover today. So today is March 10th, and let's find out what happened this week. Save the date. I do have my class coming up at the end of the month on March 28th, Homebuying for Nurses and Teachers with the latest market updates. This is a really cool program. It's the Star Loan program, and it is open to a wide variety of professions. It is police, firefighters, first responders, teachers, principals. There's a whole list. So if you think you might fall into one of these categories or know somebody who is interested in buying a home who falls into one of these categories, I urge you reach out, sign up for the class, send this information to them. It's a really good program. And what happened this week? This week, I had a lot of people that were waiting on various things to happen or what have you. But tomorrow I got 3 appointments lined up back to back after not having more than one appointment on a day for quite a while. It was pretty slow for quite a while, and now I'm seeing things pick up super fast. So I'm excited to see where this takes us, and I will have even more updates about this coming soon. But I have buyers, sellers, all lined up, so I'm excited about that. Jump back into these slides because, as I said, I'm excited about this content today. So just a quick monthly recap from the Northwest MLS. Brokers say housing activity seems to be trending in direction of a normal season market. There were about 1/3 fewer homes listed in February than the February before, than in 2022. Pending sales were down 19%. Year over year closed sales dropped 17.3%, and median prices slipped 1.7% area wide for the MLS. Yeah, not super strong numbers, right? But open house traffic has been brisk. It is picking up out there. So as I said, I'm seeing the activity pick up in my clients, and other agents are saying the exact same thing. I've heard open houses have been incredibly busy the past few weeks, the past week or two. Rates went up, but there are a lot of signs that rates will go down in the near future, which we'll cover in depth in a minute. But there was about 1.7 months of supply overall on the market. And although the number of homes for sale in the Tri-County area of King, Pierce, and Snohomish counties is more than double from a year ago, there were still fewer homes available to buy in February than in January. So the end of January, rates went down, things picked up. Buyers were out there trying to snatch up these homes while these sellers were still in this mindset of it's a slow market. Listings were more than 40% lower than pre-pandemic levels. So even though we're down, 17% since last year, we're down 40% since 2019, 2018. So keeping this in mind, we are really short on inventory. J. Lennox Scott, John L. Scott's chairman and CEO, said that new listings are selling fast, bringing back the multiple offer scenario for some properties. Unsold inventory virtually sells out in the more affordable mid-price into the upper end price points. So all price points are selling pretty quickly if the home is priced appropriately. So making sure that if you're buyer ready day one, making sure you're pre-approved, ready to go, and are ready to pounce when you do find that right property. Year over year home sales prices down, but that's not surprising because of how high it popped last year when everybody was in a frenzy. You remember that frenzy of last year when people were putting in offers and not getting them accepted over and over and over? That's not happening this year. So yeah, sales prices are lower because people aren't trying to bid each other out of homes. And I did call this several months ago in one of my updates. Late winter, early springtime, we were going to start seeing negative year over year prices for our region because things popped up so insanely high in February, March, April, May of last year. We're just not expecting that pop this year. That was unprecedented. So home prices have risen 42% in the past 3 years. That is greater than normal investment return. And it is making it really, really hard for buyers to enter the market. If you don't own a home already, it makes it hard to get in on that first rung because prices went up so much. And if you're competing against people that already own homes, they have a lot more equity, a lot more money to play with in the game of buying a home. Many home buyers are making their buying decisions now while inventory is available. They'll refinance later. And I think this is a very smart decision because, like I said, it's not going to pop up as high as it did last year, but we're short on inventory. People need homes. It's going to happen. Homes are going to go up in price and there are going to be multiple offers. But if you get in now and then you can refinance once rates drop get in before the frenzy. That is my recommendation if you can swing it. It might not be right for everyone, just prefacing that, but there are many situations in which it does make sense to move forward right now. And fluctuating rates likely contributed to the recent sales activity in the end of January, beginning of February. So that's why we had such strong February numbers. Valentine's Day, we did see interest rates start to jump up again, and they remained high for the next few weeks. Overall, the total listing count in this is full US. So the pandemic is the red line. You can see we stayed at a pretty consistent inventory level throughout the year, January to December, January to December, January to December. And then the pandemic hit and we have dropped in inventory levels ever since then. So we're still down here in inventory when 2017, 2018, we were up way higher on our inventory levels overall in the nation. And this is true for our area as well. So this is just showing that in another way. We're still 47.4% lower on the number of homes for sale now than we were prior to the pandemic. That's a big chunk. This is nationwide. And if we bring it locally, this is for Southwest King County. Southeast King County is not that much different. In January and February, the purple line here, this is this year. And you can see how much lower our inventory levels are of new resale listings coming to the market. And partially, lack of inventory is lack of overall inventory, whether owned or not. We have underbuilt for 14 years straight. In 2022, we hit our average annual units completed line here, but we have a lot of makeup work to do. And to the tune of 1.6 million to 5.24 million homes, depending on who you ask. Like, we are short a lot of homes in this market to have a balanced market. So right now, that is not the case. And into the Seattle Times news, King County home prices dropped for the first time since May 2020. Like I said, I called this one a few months back because it's really not that surprising. Prices tumbled once once interest rates hit 7%. We had an increase in inventory, and that inventory has been cleaned up over the course of the winter. Not much more coming to the market, and we're low on inventory now. So February price drop in King County, the first since May 2020, reflects the new reality in Seattle. I don't think it's a new reality. I think that was exactly what was expected. You can see the home price activity here for King a year ago, 857 down to 800. Every other area dropped down a little bit sooner, but overall, not a huge price drop year over year. It's just that it popped up so much more than normal in the spring. Percent change in price in closed sales, percent change is down 11% in Seattle. Southeast King County, we're down 24.5%. That's huge. So we are having 3/4 of the sales that we would have normally in February. Southwest King County median prices are up for condos. That's about it. Everywhere else is down. And a lot of people are playing the wait and see approach. Buyers are holding off until interest rates go down. Like I said, I don't think that is a fantastic idea in a lot of situations, but sellers are holding off because they are either holding on to last year's prices. They are learning they can't get what their neighbor got a year ago. They have an incredibly low interest rate already that they don't want to let go of, or they just have uncertainty about what's going to happen in the future and don't want to take any risks, don't want to make any moves. Homeowners who choose to list are watching their home sit on the market a little bit longer, but this is compared to last year. If you're comparing February to January, that is not necessarily the case. And this I'm just going to briefly touch on. Washington House passes a bill that would ban single family zoning. This is passed the House. It is currently being reviewed in the Senate, but proponents believe that it would increase the density of housing without adding to the urban sprawl and would be critical in addressing the housing shortfall contributing to the high level of homelessness. Opponents argue that zoning decisions should be made at a local level and that statewide measures are a little bit too vague. And that brings us to our local market stat minute. We did tick up in pendings this week and down in new listings. So 592 new listings, 685 pendings, 442 sold. And if we bring it to our local areas, we have fewer new listings here on the south end compared to the pendings. If we look at overall, that green bar was a lot closer to the pending. Here in the south end, it looks like we are extra short on listings. So those King County listings must be made up elsewhere in our region. And overall, Southeast King County months pending is at 0.7 for February. This is our February recap. 69.1% of homes are selling within the first 30 days, and that is a frenzy. And if we look down to the lower price points, we have 0.4 months supply, 0.6 months supply. This is really short on inventory. And for Southwest King County, fairly similar story. We got 0.8 overall, though. That is really short on inventory. Our lower price points, 0.4, 0.8, 0.7. We do have a little bit more inventory compared to the demand up in the higher price point. And last time for our weekly average mortgage rate, we had 6.65 and a daily of 6.97. This week, our weekly average mortgage rate is 6.73, so going up again. And Fed Chair Jerome Powell spoke to a Senate committee earlier this week and suggested that the Fed will continue to raise the Fed interest rate moving forward, at least in the short term. But the economy is showing signs of resilience, mainly due to consumer spending, and rates are increasing. Overall, housing costs are increasing and therefore impacting inflation, which continues to persist. This was the quote I had posted into my slides when I came back to my computer and realized that there was breaking news. So, breaking news. There was a bank that actually failed today. So the Fed took control over the bank's assets. And this is one of the signs that we are headed into a recession, is banks failing, and not the big banks. They say that the big banks are pretty secure right now, but the Silicon Valley Bank, which was really heavy into investing in startups, tech startups, they have, the bank failed. So the second headline here, headlines spell good news for rates. This was just in an email in my inbox like a few minutes ago. So as we head into the weekend, the jobs report and the developing situation with the Silicon Valley Bank led to significant improvement in mortgage rates, resulting in the best rates we've seen in nearly a month. What does that look like? That looks like 6.76 on our daily rate. But if we look at it a little bit closer, the blue line is Mortgage News Daily, which reports daily. The other two report much less often, so they're more of an average. Freddie Mac, this is the weekly average mortgage rate that we follow online, and it goes back about a week. So the past week and a half have been crazy. We popped up over 7%, and look at today. We just took a nosedive down compared to what we have done recently. This slide obviously doesn't have that nosedive in it yet, but this whole January, we were traveling along in good buyer demand between 6 and 6.5%. And then in February, we shot up above that 6.5% and saw limited buyer demand. And then recently above 7%, really curbing the demand in the last week or so here. But with that nosedive down, that is going to be completely different. And this, if we had today in here, would be totally different, but this only goes up to March 2nd. The blue line is the 10-year treasury yield, which traditionally the 30-year fix follows. And you can see the gap here has gotten shorter and shorter and shorter. So really, interest rates are a little bit higher than they should be just based on the level of fear in the economy. I thought this was really interesting. This came up in a meeting that I was in, or a class I was in earlier this week with a lender. So the apartment list rent, this is just a comparison year over year. But the CPI, the Consumer Price Index shelter section, it uses a accumulation of the last 12 months. So the change from month to month and added up. So this whole bar is just now getting averaged into the Consumer Price Index. So this should start kind of taking a curve down anytime now. April, May, this line will definitely be ticking down, showing that the inflation is slowing down. So I just thought, I don't know if I did a good job of explaining that, but I just thought this was super interesting. So if you are interested in having me explain this to you better, just reach out and I'll have that conversation with you. And jobs. The market is improving in the right way. More jobs are being created, but even more importantly, a greater number of Americans are seeking jobs. So this means more people are applying for unemployment, which is one of the metrics the Fed uses in gauging the inflation and what they're going to do. They need to see the unemployment rate rise before they'll let the Fed rate drop. But looking at things headed forward, mortgage rate projections, the average of these three big players is ending the year about 5.67%. They're all pretty similar, not too far out of line. But these are the averages for quarter 1, 2, 3, and 4 for heading forward. And estimated national price performance projections. This is an average of a bunch of price performance projections. 2023, a lot of people think that we'll lose a little bit of value on our homes year over year. But if you get in now, you will see a significant amount of appreciation over the next few years if all these experts are correct. If you are interested in buying or selling in the near future, please reach out. I do have my buyer and seller guides available for spring. This is super relevant information that's just geared towards buying a home right now. Get it while it's good. And just one last reminder of my home buyer class for nurses and teachers on March 28th. You can scan the QR code here. Ashley and I will be teaching that. It's a webinar, and we hope to see you there. If you have any questions, please feel free to reach out. My phone number and email address are on the screen there. I'd love to have a conversation with you about the market in your area or an area you're interested in. So please feel free to reach out if any of this needs clarification, because I know I kind of flew through it today. Thank you so much for joining me. I will actually not be back here next Friday. I'm taking next Friday off, but I will be back here in 2 weeks. And if things keep happening as fast as they are, I'll pop in here a couple times, not on Friday, but on another day next week to try and give a little update of what's happening with the economy and interest rates and all that. So stay tuned. Have a fantastic couple of weeks, and I will see you next time.